You don't need to be wealthy to start investing in real estate, but you do need a plan. So let's break down the numbers. Welcome to the Brandy Leiden podcast. I'm your host, Brandy Leiden. And in this podcast, we're going to talk through all things real estate, wealth building, and investing. And what I really want you to do is reach your financial freedom and live your life worth living. The three things we're going to talk about today is the traditional path, creative entry points for investing, and the real minimum is education and discipline. So we're going to break down each of those topics today. So thanks for joining me. Traditional path, let's talk about FHA loan. So if you are a buyer, a lot of times you've heard FHA loan. It's the minimum amount down to buy. So typically like 3% down. Now, if you're an investor, so maybe you have this in your head, oh my gosh, I'm gonna buy my first rental property and I only have to put 3% down. Probably not gonna happen for you. Sorry to bust your bubble on that one. Yet, there are lots of different ways. So when we think about a traditional path for buying your first home, FHA, great option. But when you talk about investing, there's tons of different options, okay? So we can't really be short-sighted or not very open-minded when we talk about all of our different options. So you have different banks that will provide investment loans. So most of those are 10% to 20% down on your investment loans. And you've got to really like dig in and find a good connection. Maybe it's a local bank for you that's you're going to build that relationship with. And then as long as you can provide, all the details, they can do all of your investings, all of your rental properties, all of your short-term rentals, whatever path you go down. But you really cannot be pigeonholed into like the traditional type of loan is this, for investing, there's lots of different options. So in addition to, 10 to 20% down, you've made that partnership with your local lender. You also have seller financing. So a lot of people, if you're buying that fixer-upper, maybe it's an older person that is really just looking to like get out. Maybe it's paid off for them, and they're wanting a way to make money, and so they might do seller financing. So the owner financing is another term that you hear. It's the same thing. That's an option for you as well. And so really, it's just being open-minded. And then creative entry points. So everybody thinks about diving into real estate investing, and they think, oh my gosh, I need all this money to buy my first rental house, or I've got to save up. And so it's like really getting the mindset around like there's plenty of ways to invest. So my first flip ever, I had zero money down, zero. I took a HELOC on my primary residence. We're not going to dive into HELOCs today, but you can get a HELOC on your primary residence, and that is your down payment for your first flip. Purchase the flip, and you rehab it, you sell it, put that money back into your HELOC, and you're good to go. Now, a lot of times it's either a HELOC or a line of credit, and it's basically a rolling line of credit, so you can do that multiple times. Pay it off, pull it out again, buy your next property. And so that's a way that if you really are like, oh, I just have to save for 5 more years to get started, odds are if you own a home, you have some equity in your home and you can do that HELOC option. Creative entry points for sure. You also can partner. So also on my first flip, I partnered with somebody. So let's say that you have time and some skills, and someone else has the money. You can partner and 50-50. And a lot of people will flip homes to get some quick cash, build up their pot, and then they buy their first rental. And so then they have the money to buy that and hold it and keep it for 10, 20 years. So those are other options. So you can HELOC your primary residence. You could have a partner on your first investment property if you have the time and skills to put into it. And there's some of you out there that just have the money and you're like, I just want this money to grow. There are plenty of people out there that are willing to be the boots on the ground and be the skill and do all of that for you. So you can say, here's the money, partner up, and split it 50-50, however that you do it. So lots of different creative entry points to get into real estate investing. Just stay open-minded. Oh, and I want to add one more thing on the creative entry point. If you are young and you're okay with living creatively, you could buy a duplex and live in one and rent one. This is totally doable, and that person that you're renting to is essentially paying your whole mortgage. So you're living rent-free and building equity and having cash flow at the same time. So it's an amazing way to start. And that you could do FHA loan most likely. Check with your lender on that, depending on what state you live in. But yeah, there are lots of different creative entry points. The third thing we're going to talk about is the real minimum is going to be education and discipline. So everyone's like, what's the minimum amount that I need to start investing in real estate? Your education, like how educated are you in the process, and your discipline. Now, I would recommend partner up with a realtor that is super familiar with investing themselves, so that you have that mentor, that educator, like to walk you through this process. No offense to the realtors out there that have never done this themselves, but if you haven't, you're not gonna be serving your client well to walk them through this process, okay? So find yourself a great realtor that invests themselves and that can mentor you through the process. And then the discipline aspect of it. So how many of you guys have, ran to the store and spent $200 that you didn't need to spend? Yep, totally me. I probably did that yesterday. Discipline with your money is going to be huge. And I think it's really just like budgeting and executing a plan. So on the last episode, I challenged all families to write down 3 wealth goals. It's a similar thing, and then an action plan to do that. So if you are wanting to buy that first rental property, what is your plan? Like, you need to be very disciplined with your money, all right? So if you're saving 10% of that paycheck, what kind of account are you putting it in that you cannot access it? You cannot log on and transfer it back over. Putting it in a safe space, executing a plan so that you know, all right, in 1 year, in 2 years, I'm gonna have this amount of money, boom. That's the discipline you need to be able to invest in real estate. And I think a lot of times we want instant gratification. And this is really a scenario where you have got to look at the long term and have some kind of vision board up there where you're focused and you're able to execute this plan, knowing that that's a long-term goal. My action step for you guys this week is going to be, I want you to sit down and make your plan. What is your goal for investing? All right. And if that's, you need to save $500 a month, if you need to save whatever it is, write it down, make yourself a plan. What is it going to take for you to get that 10% down, or what's it going to take for you to get the credit enough for you to get a HELOC, okay? And execute it. Set a date for yourself, and what do you have to save every month, and make yourself a plan. So that is my action step for this week. Thank you guys so much for watching. Thanks so much for spending time with me today. If you want to know more about investing, wealth building, or real estate in general, head on over to brandyleiden.com and you can book a consult with me today. Don't forget to like and subscribe if you want to hear more episodes like this one. See you next time.